had the initial trade open today, and we were kind of thinking that today would be another sell-off and we'd be down for the week. But shocked to look just ahead of our broadcast, we're actually higher on the S&P 500, a little lower on the NASDAQ composite. Is that enough to change the actual tone or direction of the markets moving into next week?
Hey, Tim, I think that there's a lot of nervousness about what these data releases are going to say, and also about Nvidia. Plus, there's the fact that AI, a lot of people are talking about it as a bubble, and all those things are causing people to take profits. But I don't think that there's fundamentally a shift in sentiment, which has been largely constructive for equities in the U.S. So I think what we're seeing today shows you that the dip buyers will come in, and that sentiment hasn't changed.
When do the dip buyers not come in, though?
Yeah, we're still in a world where there are going to be pullbacks, and when those pullbacks happen, the dip buyers will come in. I think it's interesting. My colleague Cameron Kreis on M Live, he wrote about the 1999 bubble that we saw multiple pullbacks of 10% there. As people started to digest, is this getting out of control? But, people came into the market over and over again. I would say that what we're going through now, even though it's less drastic at this point, it's still that same sort of sentiment. That is that we're in a revolution, or a technology revolution, and you want to be owning these stocks.
Hey, one of the things I want to ask you, Ed, and I started digging into both the NASDAQ 100 and the S&P 500. If you go, okay, there's obviously the main average or the overall average, but then you look at the S&P and it's kind of an even split of names that are higher on the day and lower on the day. Same thing for the NASDAQ 100. And it made me also look at things like the AAII readings when it comes to being bullish and bearish in the market. And it looks like investors have increasingly been becoming less bullish and more bearish. So tie it all together when you start looking at different metrics, what it tells us about financial markets right now.
It tells us that we're living in a very narrow market. That the market is very much about AI, and to the degree that continues to go forward, the market can go forward. But there are many times when we see just the top 7 names in the market, pulling the market up, but the breadth of that move is relatively weak. So there's a lot of angst about the economy, about those numbers, and also about there being a potential bubble. But it's a very narrow market, which is unhealthy. The hope has to be that it broadens in some capacity, but I think that those things that you're pointing to, Carol, they definitely show that there's a certain unhealthy aspect to this particular upswing.
Okay, one last thing, because we can see markets swing depending on an earnings report or a big tech announcement. Nvidia, as you mentioned, we do get their earnings next Wednesday. It's a big one. It's the nucleus, it feels like, of the AI trade. Just quickly, 30 seconds. If we get some optimism, then we're off and running again. If we don't, and they are much more guarded, although Jensen tends not to be guarded, could we see a sell-off?
What we've seen typically with Nvidia is the expectations are so high that they'll beat, and then the market will sell off slightly. So it's like a buy the rumor, sell the news type of event. And I don't think that this is going to necessarily be different. So my expectation is that they will beat, but perhaps by not enough. We'll see the sell-off, but then that's when the dip buyers will come back in, unless there's something else that happens in the interim that shakes people's faith in AI.